Good morning this Thursday, the 28th of September. I'm Grady Wulff, Market Analyst with Bell Direct. Inflationary drivers rising sparked a mixed session on Wall Street overnight as the price of oil and bond yields respectively rose, which dampened investor sentiment in equities. The Dow Jones fell 0.2%, the S&P 500 edged just 0.02% higher, and the Nasdaq rallied 0.22% following a turbulent few sessions for the tech-heavy index. The benchmark on the 10-year treasury yield in the US hit its highest level since 2007 overnight, while the 2-year treasury yield also climbed. Energy stocks were naturally the best performers on Wall Street overnight, amid the price of oil rising 3%. Inflation remains a key concern in the US, with volatility in investor sentiment expected to continue over the coming weeks as further economic data is released. Over in Europe, markets closed at a 6-month low on Wednesday as investor sentiment in the region continues to be dampened by the state of the global economy, rising interest rates and inflationary concerns. The Stoxx 600 fell 0.2%, Germany's DAX lost 0.25%, the French CAC fell 0.03%, and in the UK, the FTSE 100 shed 0.43%. Oil and gas stocks in the region did most of the heavy lifting in Europe on Wednesday, following that uptick in the price of oil, which offset some of the losses among other sectors, including insurance stocks. The RBA's rate decision headache worsened yesterday after Australia's CPI monthly indicated data, the key inflation reading for the country, came in at an acceleration to 5.2% in the 12 months to August. While this was in line with economists' expectations, it still is an increase from the 4.9% rise in July and provides further support for the RBA to consider raising rates again or maintaining the cash rate at 4.1% for longer to ensure inflation comes down to that target range of 2 to 3%. The key drivers of the boosted inflation reading for August were housing, transport, food and non-alcoholic beverages, insurance and financial services. When the RBA meets next week to announce the latest interest rate decision, the market is currently factoring in just an 11% chance of a rate hike. The market fell in afternoon trade locally yesterday following the release of CPI data, leading to the ASX 200 closing the midweek session down 0.11%, weighed down by the tech sector, falling nearly 1%. Star Entertainment Group tumbled over 9% after the embattled casino operator raised $565 million from institutional investors through offering new shares at 60 cents per share. At the other end of the market, Tamboran Resources rallied 11.5% after announcing the upgrade of its gas resource to 2 trillion cubic feet at its 100% owned Beetaloo Basin. On the commodities front this morning, oil is trading just shy of 4% higher at $93.93 a barrel, amid data showing crude inventories in the US fell by a much bigger than expected amount last week. Gold is down 1.26% to $1,876.55 an ounce, and iron ore is down 1.26% at $117.50 a tonne. One Aussie dollar is buying 64 US cents, 94.92 Japanese yen, 52.56 British pence, and 1 New Zealand dollar and 7 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the local market to open Thursday's session down 0.18%. And now let's dive into some trading ideas for your consideration today. Bell Potter has initiated coverage of COG Financial Services with a buy rating and a price target of $1.73. Bell Potter's analyst sees COG's recent acquisitions will add 182 broker firms nationally across the car and lifestyle markets for COG, and as a result, Bell Potter expects an uplift of $833 million in total funding volumes, with improved cross-pollination into higher margins parts of the group. And Trading Central has identified a bullish signal on Austal following the formation of a pattern over a period of 36 days, which is roughly the same amount of time the share price may rise from the close of $1.82 to the range of $2.29 to $2.39, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Thursday, and as always, happy investing.